Welcome back to the channel. We're going over the Nasdaq and the S&P 500, what stocks you need to be looking at over the next few days and hours. We have a very big event going on as well this week that will influence the market, and we're going to be covering that here in the video. Like, subscribe, do what you got to do. Is the stock market going to crash? Let's get to it. So what we're going to look at here is what's really happening with the S&P. Now, going into yesterday's video and kind of everything I've been saying over the past few days is you have this region right here, about 13,000 on the Nasdaq. If you don't follow the indexes, the NAS 100 is the easiest way to follow futures. And futures are going to show you how the market is and will move. These are your lows from March. Now, you did make a little bit of lower levels when it comes to the Nasdaq. You did SPY in March, just so you know. So you're coming to that region and you keep kind of coming below it, coming back above. Now, this morning, you saw some weird activity. I saw some of that buying up to it, sell off, back up, sell off once again, and back and forth. End of the day, a lot of buying kicking in there. This is where things got really interesting. So in my opinion, I do believe going into the Fed meeting, there's room for upside. But I'm going to tell you my basic two outcomes or what I'm looking forward to this week specifically. So what I'm looking at specifically on Nasdaq, I'll cover it on S&P in a second, is basically the possibility of hitting this region of about 13.4 to 13.5. It's that same region we had previously. You came up to it, you got rejected, pushed back down. Now there's another resistance that's a smaller level, and I will say this is a pretty large resistance as well, but it's 13.3, but this is kind of the ultimate top side. So going into tomorrow and into Wednesday, there's definitely a case to push up. Now, why would you push up here? It's worth mentioning as well, you had significant volume from 1 p.m. on, about the last 2 hours of trading, which we covered in Discord, going over specifically what institutions were doing. I believe you're starting to see a little bit of short covering, right? So I can anticipate volatile moves back to this upside, maybe even hitting that 13.5 region. You saw a lot of that volume kicking in there, a lot of buying pressure, which again, I believe is solely from short covering. Because if you do not remember what happened the last time the Fed meeting came out, well, what happened when they released those rates? You kind of bottomed out, you came up, came back down, and then boom, you shot up like crazy, going to those local highs back there, end of March roughly. Now, do I think that's going to happen? I'm going to get to that here in a second. So what I believe is if you continue to see upside into this Fed meeting until Wednesday, I personally believe there is a downside. So let's make this very clear. If you continue up in a channel into Wednesday over the next day, day and a half, I anticipate you'll move up. And then after that rate hike is decided, which most likely is a 0.5, we're going to go over that here in a second as well, you will dip after that news. Because I do believe they're going to have a little bit of urgency behind them as well, indicating that more is going to come and there's no real slowdown nor help along the way. However, in my opinion, if you do come out tomorrow by some chance, and this was kind of the thesis I was sitting with talking to people today, this is the less likely one. I anticipate you're going to get that upward movement, but if you come down tomorrow, you break back down, you start breaking down towards lows like 12.5, maybe 12.2, I anticipate from the Fed meeting, you're going to get just a massive bounce. Why? I believe the Fed will come out maybe a little bit softer on the market. That's why when we mentioned this about a week, 2 weeks ago, back here, when you started to really just start getting hurt from these highs right here, about 14.3, you were seeing love on the market. You were seeing help on the market. You were seeing the market pretty strong overall. But what happened here? Powell came out and he saw the strength, and then he really was like, you're not going to get any help from the government anymore. That's not happening. We have urgency. Inflation's hitting. It's not peaked. He was very clear that he believed it has not peaked yet. There was no evidence of interest rates peaking already. He was saying that very clearly, that you could still have inflation coming in and that they had to tread very carefully and that they have to start trimming that balance sheet. So he kind of hit you with all those right here, and obviously you came tumbling down from there. Now, if you come out to the downside, I think they may be a little bit softer on their approach. However, if you're coming in strong, I believe personally, they won't hold back at punches. They'll hit you with the truth, and you're going to start seeing more downside. Now, where I want to cover specifically is looking at these yields, because looking at today, this was something we have not seen in a long time. Yields, the 10-year specifically, hit 2.99, I believe, today, which it hasn't hit since about '08. Very important to cover. That has not happened since the 08 move down here. You were setting up almost identical today at the highs. Where were you sitting at on this conversion rate? You were sitting almost at 0.99 once again, and you are getting very, very close to being completely inverted, which happens then. You haven't seen that completely, not even in the 08 crash. You saw that way back here in the .com crash. Yes, 2000, 2001 is when the last time you saw this, not even with the housing bubble. So that's a very, very, very big concern as well. And then as we look at bonds, what's happening there? You can see bonds continue to drop, TLT. This basically shows you what they think is going to happen with rates. And guess what? People are not buying bonds yet. They expect more blood everywhere. They anticipate they're going to keep pumping rates and the market's going to keep going down. Therefore, the TLT 20-year bonds, no one wants them. Nobody wants those at all. Extremely, extremely worrisome. Now I'm going to look at the S&P 500 because I know people have questions regarding that. And it's going to be essentially the same as my Nasdaq rundown, except you've come down to your scary levels on S&P already. This is the very, very, very important thing to look at right here, is that you have come down. You've broken your lows. So if you're looking at those lows from way back here, back in March, you've broken them. And it's important to know that you are trying at least to get some sort of love and some sort of bounce off those levels. You are bouncing out of that region. So that is good news that you are trying to bounce. You had a little wick down here down to 405 on the SPY specifically, but the S&P is trying to break back above this resistance locally at 41.63. Now looking at the SPY, looking at that key level, it's right here, those previous lows that you had going on. So if you look back on last Wednesday and Thursday, these were your lows where you were bouncing 416, which were those lows from March. But in February, your lows were down here at about 410, which you came below today. But it's good to see that you are mounting and getting back above those levels. And it's good to see even before 1 o'clock when you got that push up, you were still increasing on volume. But it's very important to know that I do believe a lot of this is from short covering on the broad scale of the market, because people want to secure those profits and see how you're going to move going from this rate hike. Is there going to be some certainty? Is there going to be some good feelings? How is it going to kind of tread going forward? Upside here, I'm going to have to personally say about 425 is my top line. Maybe, just maybe, you come up to 430, 429. That would be extreme top side before rate hikes. But going into tomorrow, I could see 425, maybe 420 around this region here. But of course, you got to break above 416. So if you're looking to trade the upside tomorrow, what am I looking for? A clear break through this zone, a retest, and then you're going to trend in this zone here, probably towards 424, 425. Again, if you start to see some downside, what am I looking for? If you start to break below these key levels and get back below that 409, 410 region, I'm anticipating a crash down to that 400 region. That's what I would be looking for, right? Right back down to here, testing that level. If you break below 405, 400, there is not much support. You need to know that. There is not much support at all. So you're holding on by a thread, and it's good to see that you saw some buyers stepping in there. So I believe you could see some upside. I think the downside is less likely into the Fed meeting, maybe more on Wednesdays when you see that downside. But I think you might see a little bit more upside coming into tomorrow. So don't be afraid if you're on your longer term positions to the downside. Although I would consider for myself, I have been taking profits along the board, but I am preparing to get back into the shorts if we start to break below these key levels. But as of right now, you're at that key level, so you have to play into the bounce, specifically into the Fed meeting, and that's just how I see us moving. Now, it's important to know if you go to investing.com, you can see you're going to have that at 2 p.m. Eastern is when you have the rate decision, and then you're going to have obviously the press conference where Powell will come out and speak and everything like that. So you have a lot of big stuff coming. Make sure you're staying tuned. This is on Wednesday, just so you know, so don't be taken by shock. It's not happening tomorrow. It's going to happen on Wednesday, but I expect a lot of volatility in between then. Just looking at VIX, it's looking like you're going to get crazy, crazy volatility. You broke the highs from previous levels. You're at almost hit 37 today, so things are getting crazy. Like, subscribe, do what you gotta do. Content almost every single day about the S&P 500, the stock crash, what is happening, and the safest and best investments when you're looking at the market. But as always, it's not financial advice. Do your own research. Have a good one, traders.